For decades, investors assumed globalization would reduce costs, smooth supply chains, and dampen volatility. Today, that assumption no longer holds. Hi, I'm Chris Heisey, Chief Investment Officer from Merrill and Bank of America Private Bank. We're observing in real time how rising geopolitical tensions, energy shocks, and supply chain disruptions can expose just how fragile critical systems really are. National security and preserving economic interest are increasingly dominant drivers of capital intensity, a theme the Chief Investment Office has called a defense supercycle. Now, to help us understand what this fragmented world means for investors, I'm joined by Haim Israel, Head of Global Transition and Thematic Research for BofA Global Research. Haim, the world is very volatile. Geopolitical risk is at its highest level. But in terms of where we are today, how is the current military conflict and coming out of Ukraine and Russia affecting the investment landscape from your perch as it relates more or less to security?
It's not just security. And there's a fine line between the corona pandemic, the Ukraine situation, and the current conflict in the Middle East. We've seen a world that is being deglobalized. We've seen a world that countries are getting more and more isolated, thinking about their own resource, their own supply, their own independency from a macroeconomic and geopolitical perspective. And we see a race over those resources, over technology, over human capital, over everything that we see right now. The conflict in the Middle East that we're seeing right now is a continuation of what we have been seeing in Ukraine, what we've seen geopolitically lately, and we think this trend is here to stay. The world of AI, the world of technology imposes a lot of risk, imposes massive need for resources. As I said, from human capital, from financial assets, to natural resources, energy, and so on and so on.
Can you talk about the defense supercycle we're going through right now in relationship to the ones that we had prior?
Of course. So I think it is changing. So of course, obviously, we are seeing more and more expenditures. We see NATO announcing on $1.3 trillion of investment. We see countries like Germany and others in Europe that have increased their spending to more than 5% of GDP. So that is the obvious part. And I think this trend will continue. Part of the independency theme that we've been talking about, that countries need to take care of their own. We are seeing the risk. But the second part of it, which we think is actually more interesting, is what we are spending on. You can call the conflict in the Middle East the first AI conflict. AI is taking a part of this conflict, from cybersecurity, from defense and analytics, from intelligence, from the weapon systems. Everything is so much more complicated, smarter, and using AI. And this costs money. Now it's spending on defense tech, which is so much more complicated than it used to be in the past, because in the new battlefield, you need an edge. The real value for investors should actually going to go to defense tech, where AI can start meeting the traditional defense systems. In the future, we're probably going to talk about more robotics, humanoids, and automation, but it's you need to think about as the first AI conflict.
Yeah, we're starting to see capital actually accelerate into those areas. We saw it in the past in terms of the initial outlay of investment in those areas to build it out, but now it's becoming a little bit more of a flywheel. And if we take that concept and we move it over into a more traditional end of so-called geopolitical conflict, it's energy security. We talk about energy security today in the context of the world still needs energy, oil and gas, and how important that is.
So we've been saying for quite some time that energy probably is going to be the new weapon, especially after we saw the invasion to Ukraine and now the Hormuz and the Middle East. We're understanding the factor about how much energy is important and energy wars all over the world. Now, you have to top it with the theme again of technology, of AI, of the needs. We will need so much more energy in the future, even in peaceful time. Now, what we've seen is that investments in energy have started, and it started a lot, and the demand is going through the roof. Remember one thing, 83% of the world is importing oil and not exporting oil. And more than 25% of this export is actually going through the Hormuz, So we understand the problems that are happening right now. Renewable energy is the solution. It is cheaper, 25% cheaper per energy unit versus fossil, especially now. Now it's actually even higher than that. And we need to remember one thing. This conflict, hopefully, is going to be over at one point. But the problems of energy demand are just going to increase. I'm a big believer that more and more countries will pursue other solutions of energy and not necessarily fossil. So we are still big believers on renewables. We are still big believers on nuclear. SMRs is slightly of a long-term technology. If I take it more long-term, all the way up to nuclear fusion, those are going to be the big winners long-term over here.
Critical minerals, supply chains. Talk to us in the context of how important those four words are.
Right now, we understand how fragile the supply lines of critical materials are right now. It's not just the mining. 83% of rare earth metals are controlled by China directly or indirectly. So yes, maybe lithium is mostly mined in Chile or in Canada or in Australia, but the refining of it is still being done in China. Big part of it is actually going through the Hormuz, and we see that the supply lines are very, very fragile. Going back to this world of security, we will see development of new resources. We'll see development of new assets and trying to go to two ways. First of all, I need to develop completely new systems. So part of it is going to be with technology. No one told us that we need to use lithium for our batteries. Did you know, Chris, that butter, the one that we bake cakes and bread with, holds 10 times more energy density than lithium? But for some reason, we're using lithium. Technology can help us to move to other materials and other minerals that we can use in different ways. And I'm a big believer that part of the reason that we're investing so much in AI, all those trillions of dollars, is actually help us to come to completely new systems and materials which are going to give us independency, which are going to reduce our reliance on traditional natural resources. But long term, like energy, countries are going to move to completely different solutions and going to start using technology for these solutions.
Now, in my almost 3.5 decades of studying investing, Chaim, I have never seen butter in a portfolio. Now, having said all that, in the context of energy security, defense supercycle, critical minerals, supply chain, how should we think about these mega trends and sub-themes in the context of portfolio positioning?
Think about the big picture. I always urge to stop focusing on the short term. Stop focusing on the quarterly numbers, on the short-term trends that we're seeing right now. We're heading into a world of massive investments. Bricks and mortars are going to be big winners over here. We're going to upgrade our networks, our energy networks, our water networks, our natural resource supply lines. Everything is going to be upgraded and changed. We're going to have to invest in completely new ways of energy. We have to invest in security. Security is not just traditional weapons. Security is AI. Security is cybersecurity, which is, as we've seen with the current conflict, is a pivotal part, exactly like airplanes and ships. And we have to invest in the new technology around all those areas.
Let's switch now a little bit to risks. We can't talk about geopolitical volatility without what risks should we all know about?
So we are big believers that those what we call the AI wars will continue. The race over resources will continue, and we'll see more and more fractions between the superpowers. And now those fractions are not just, of course, US, China directly. We've seen them all over the world. And we are seeing that the United States is trying to limit access of China to technology. As a result, part of the risk is not just trying to get this technology, but actually part of the risk is going to be a race for technology. We are seeing race over AI models, semiconductors. The one area which I would highlight as a big risk worldwide is water. No one really is talking about how much water data centers are consuming right now. 2/3 of the planet is facing severe water shortages because of the IT sector. So that's going to be another major risk that we are going to see over here. One of the long-term risks is, of course, right now we're heading into an inflationary environment. Prices of commodities are going up, rare earth materials, the rush after every critical materials is inflationary.
If you think about one major takeaway in the context of how capital is flowing and investments in general, what would that be?
We built our world in the 50s, Chris, after World War II. We topped it with some software in the 90s during the internet revolution. We topped it with a little bit more hardware in 2010s with the mobile revolution. We need to rebuild everything right now. Think about the infrastructure. Think about the entire ecosystem of this infrastructure. By the way, infrastructure is also security. Infrastructure is resources. Infrastructure is energy. Everything is about to be rebuilt, and everything is part of this AI revolution.
Rebuilding infrastructure in the long run is very growth enhancing, at least in our view. Thank you for joining me today.
Thank you very much, Chris.
Haim, thank you for walking us through these powerful themes and how they're reshaping the global investment landscape. In a world defined by fragmentation rather than integration, portfolios need exposure not just to growth, but to resilience, security, and strategic assets. As always, we encourage you to continue the conversation with your advisor, if you work with one, about how these themes may fit into your long-term strategy. Thanks for watching, and we'll see you next time.